Hi, I'm Bert Nussbaumer from macrobeat.co.uk. A very busy week, really, with a lot of Fed speakers and a lot of early emotions in the market, as it seems. The sort of taper tantrum started very early in 2021, something that we would have probably expected to happen sort of, rather mid-year towards later in the year. But obviously, we had every Fed speaker out there, different views. Some really talked about 2021 could already be the moment when the Federal Reserve starts to sort of taper. That obviously, on top of what we discussed last week, where I showed you the graph on 10-year yields that rallied hard after Democrats took the Senate, that obviously fueled the emotions around the taper tantrum. And 10-year yields rallied to like 118, which has been a high back in March of last year after we hit the lows of 0.5%. So the reality is the market did react to the story. The dollar did rally on the back of higher yields. And even though the Fed Chair Powell that spoke yesterday and sort of tried to calm nerves and just reassure the market that there'd be no early hikes and no early taper, I don't really think the market fully believes it. The Federal Reserve had 1 trillion stimulus priced into their economic projection. We got 900 billion in December. Last night, Mr. Biden told us there'd be a potential 1.9 trillion to follow. So reality really is, if all the stimulus is going to come through, you cannot tell me that the Fed is just going to, do nothing and close their eyes. So I think this taper tantrum is going to be with us, some weeks more, some weeks less. But I think it's not going to go away because I think the market does not really buy the dovish tone anymore for the Federal Reserve. On the opposite side, we had ECB Lagarde speaking yesterday, obviously a dovish note as well. And I think given the issues around vaccination in Europe and some, cooling off of data with the lockdowns, I think the market believes the dovish side of the ECB, not so much the dovish side from the Federal Reserve. So I think the dollar actually started to rally this year against all the odds, with the market expecting a dollar sell-off in 2021. Last thing to say, there's 2 political issues out there. We have Italy, where Prime Minister Conte is addressing the parliament on Monday with a confidence vote to follow. So we could be in for a bit of Italian drama again, which is important for the euro. And last but not least, we still have the US political situation. Rumors last week that January 17, which will be the Sunday, that we get demonstrations from the far right. Obviously, we still have Jan 20, the inauguration, where the market is very nervous about, or the world as such. So there's 2 risk events that we don't really know which way they're going to be going, which we have to look at. The first slide I have for you today is euro dollar. Not a big move yet, but we clearly rejected the 123.5. We now sort of idle around 121. A break lower here would just mean the dollar rally would be continuing. And to be honest, I do still think that the dollar looks actually a lot better than we give it credit for. The next chart, dollar yen, testing the 2020 trend line. Obviously, dollar yen is always the one that reacts fastest to any change in US yields. So dollar yen started to rally right from the word go on January 6th. Break of 104.25 would really set the tone for further dollar strength there. It seems still we have to sort of muddle around a little bit in the meantime. The next chart is dollar ILS. That's the Israeli shekel. The only reason I showed this one is you kind of see where the arrow points. So this is the first central bank that loses its nerve on its strong rally of the shekel. Heavy intervention by the central bank, which ramped it up 4%. So it'd be interesting to see if there are other central banks during 2021 that may lose nerves on dollar weakness. The other chart is just the Dow, same old, really slow grind higher still. We lack to rally on the back of the Biden speech last night, but there is no really big story. Still generally feeling firm, but maybe just starting to get tired up here. Last but not least, Bitcoin. I don't really want to add any fuel to the sort of fire here. The only reason I want to mention it, it really seems that the sort of new generation of people out there using Bitcoin instead of buying gold for whenever there's a trouble out there. But so we do see less interest in buying gold. So something we have to watch. Thanks very much indeed. Bye-bye.